that means that the US stock market likely will have more troubles in the future. Let's look at the dollar. Actually, we'll look at the foreign exchange markets. Let's just look at the dollar itself. About literally 6-7 months ago, I was pointing out we were looking for these trades in the dollar, especially with the measurement of the Japanese yen, when the yen was really going down against the dollar. Dollar was rallying significantly. Well, the trade finally did unfold. And it did unfold late last year at the end of October. It began, and it somewhat continues even till now. But that's just the yen. Let's look at the dollar as a whole. The dollar index as a whole is a measurement against all the major currencies around the world, generally with the 10 biggest paying the largest role, which of course are the euro currency, the Japanese yen, the Swiss franc, and a couple of other ones that are lesser known that we don't care about. But at the end of the day, this index is on its low right here as we sit. It has come off significantly from 114 to 100. That's down 14%. Why is that? Why is the dollar getting weaker? Even though interest rates have gone up in this country. Generally, when a country's interest rates are going up, its currency is getting stronger. Well, that has not been the case here in the Americas. Why? Two reasons. Maybe one technical reason is that the dollar might have been overbought at the heights of the dollar's rally at the end of September, early October. However, there's another scenario that's far more nefarious. That other scenario is that the country, as it continues its bifurcation between left and right, ultimately weakens its long-term standing against other governments that might be perceived to be more stable. The stability of our country is not just based on its government or its currency. It's often based on its peoples. And if the peoples inside of a country are divided, then that means essentially the currency is worth less. Because that means a country divided is not a country that can agree on policies that could strengthen or weaken its value around the world, its intrinsic value around the world. And I feel that this is a big part of the move down in the dollar. The other part, of course, is now that we realize that the countries that we used to see as our adversaries, the BRIC countries, especially, of course, China and Russia, they have now coalesced. They've coalesced with Brazil. They've coalesced with Saudi Arabia. They have coalesced with many other smaller countries in Africa in particular that make the US weaker overall. America, because it's fighting internally, is no longer able to have a foreign policy of any magnitude that could advance American causes around the world, which just leads to a weaker dollar. I expect the dollar to weaken further. Therefore, I expect also interest rates to ultimately go higher, not just to battle inflation, but to not lose its standing around the world. And the broader concept then would be what happens to the US equity markets and your money, because most of the people on this podcast are invested in the US stock market, where we do want people to be. That means that the US stock market likely will have more troubles in the future. Now, I don't see this forever. I am a long-term believer in the country and a believer that the US always does fix its problems. However, these particular problems are those that we have not seen in our lifetimes. And so these things likely will take longer to unplay. And they probably will be more painful than the things we've faced in the past, including the 2008 financial crisis. So I'll summarize like this before we get into a couple of the other little things that are very important, is that look for us to remain mostly in cash. If you are invested out there, my personal opinion remains to stay in things that offer dividends and ultimate protection of your portfolio in the event of a market going down, which are the conservative portfolio for 2023. I like that one myself the best. I am mostly there. And then finally, this is not a time to take advantage of looking for big opportunity in big tech. I feel that's overbought. I feel the pharmaceuticals have had their play and that's over. And so the best place to be is to put your money in the sides, which ultimately is invested, will be and can be invested in short-term denominated money markets that give you a yield so we can wait it out while we find out where these markets really are going. And if they go lower, it will create an incredible buying opportunity for us at some time, hopefully later in this year. And with that, there is my summary for, what is it, the end of April 2023.